Think you need thousands of dollars to buy a rental property? Think again. What if I told you there are ways to own real estate with little to no money down? Sounds impossible, right? Well, it's not. In this video, I'll show you 5 powerful strategies that real investors use to buy rental properties, even if they don't have a big savings account. We'll cover house hacking, seller financing, lease options, partnerships, and REITs. By the end of this video, you'll know exactly how to start building your real estate empire without emptying your bank account. Let's get started. First up, we're diving into the world of house hacking. This is one of the most accessible ways to dip your toes into the real estate game, especially if you're starting with limited funds. Instead of buying a single-family home, set your sights on a duplex, triplex, or fourplex. You can snag one of these with an FHA loan, which only requires a 3.5% down payment. Some states even offer grants that can cover that down payment. So now you're in your multi-unit property. What's the play? Live in one unit and rent out the others. Your tenants are essentially paying your mortgage for you. You get to live rent-free, build equity, and pocket the extra cash flow. As you build equity, you can leverage it to secure another property down the line. Let me give you a real-life example. Meet John, a 25-year-old teacher who was tired of throwing away money on rent. John snagged a duplex using an FHA loan. His tenant's rent covered 90% of his mortgage, saving him thousands each year. Fast forward 2 years, John refinanced, pulled out equity, and bought another property. House hacking, it's not just a strategy, it's a lifestyle. Now let's say you're eager to jump into real estate, but dealing with banks makes you want to run for the hills. Enter seller financing. Imagine buying your dream rental property, but instead of dealing with a traditional lender, the owner becomes your bank. With seller financing, you cut out the middleman and work directly with the seller to strike a deal. You agree on a price, hash out monthly payments, and in some cases, secure the property with little to no money down. Instead of sending checks to a faceless bank, you're paying the previous owner directly. This strategy requires finding motivated sellers open to this arrangement. Trust me, they're out there. Meet Lisa, a savvy investor who found a seller more interested in a reliable monthly payment than a quick sale. They agreed on a price, Lisa put down a small down payment, and boom! She was a real estate owner, bypassing the bank. Lisa now enjoys a steady stream of rental income, all thanks to seller financing. Let's talk about lease options, a strategy that allows you to rent a property today with the option to purchase it later. Find a property you love and negotiate a lease option with the owner. This agreement gives you the right, but the obligation, to buy the property at a predetermined price within a specific time frame. Think of it as locking in today's price, even if the market goes bonkers in the future. A portion of your monthly rent goes towards your future down payment. You're essentially saving for your dream home without realizing it. Meet Mike, who was stuck in the rent race, paying $1,500 monthly with nothing to show for it. Mike found a property he loved and negotiated a lease option with the owner. Under their agreement, $300 of his monthly rent was allocated towards his down payment. Fast forward 3 years, Mike had accumulated $10,800 in his down payment fund, all without lifting a finger. Lease options allowed Mike to get his foot in the door of homeownership, gradually building his down payment while living in the property. It's a fantastic strategy for those who want to transition into ownership without the upfront costs. Real estate is a team sport. Sometimes the most lucrative deals come from joining forces with others. Let's talk about the power of partnerships in real estate investing. Imagine you have the drive, market knowledge, and hustle to find incredible real estate deals, but lack the funds. Now, picture meeting someone with the financial resources to invest, but lacking the time or expertise. In a real estate partnership, one person typically brings the capital, while the other focuses on finding, securing, and managing the deal. It's a match made in investor heaven. This strategy allows you to leverage other people's money to build your real estate portfolio. Meet Sarah, an ambitious entrepreneur with a passion for real estate but not enough funds. Sarah started networking and eventually crossed paths with her uncle, who had the capital but not the time. Sarah proposed a partnership. She would handle the entire process, finding the property, managing tenants, while her uncle provided the funds. They agreed on a profit-sharing model, and just like that, Sarah was in business. She found a fantastic property, her uncle provided the capital, and they split the profits. Partnerships allowed Sarah to break into the real estate game without spending a dime of her own money. You don't need to be a millionaire to invest in real estate. You can get started with as little as $10. Let me introduce you to REITs, Real Estate Investment Trusts. Think of REITs as the ultimate passive income vehicle for real estate. They allow you to invest in income-producing properties without the headaches of being a landlord. Instead of buying physical properties, you're buying shares in companies that own and operate those properties. These companies, known as REITs, are required to distribute a significant portion of their profits to shareholders in the form of dividends. And the best part? You can start investing in REITs with just a few bucks. There are various types of REITs, each specializing in different sectors of the real estate market. The beauty of REITs is that they provide instant diversification. Meet Jessica, a young professional who wanted to build wealth through real estate but wasn't ready for property ownership. Jessica started investing in REITs with just $500. She chose a mix of REITs across different sectors to diversify her portfolio. Over time, Jessica reinvested her dividends, and her portfolio began to snowball. Fast forward a few years, and Jessica's initial $500 investment blossomed into a $50,000 real estate portfolio, all without ever having to fix a leaky faucet or deal with a difficult tenant. Now that you know how to buy your first property with no money down, here's how to scale. Use the BRRRR strategy. Buy a distressed property with creative financing. Rehab it to increase value. Rent it out for cash flow. Refinance it to pull out equity. Repeat and buy another property. Example: Tom used seller financing to buy a fixer-upper. After fixing it up, he refinanced and pulled out $50,000, which he used as a down payment for his next property. So, there you have it. 5 ways to buy rental properties with no money down. Which strategy will you try? Comment below. If you found this video helpful, like, subscribe and turn on notifications so you don't miss more real estate tips. Thanks for watching.